So hello everyone, this is Bobby Lee Bitcoin here from my podcast, and we have here Richard Brubaker. We're in Shanghai doing this podcast, and Richard's been in China for 21 years in the area of sustainability.
Correct.
So Richard, please tell us a little bit more about yourself and what brought you to China 21 years ago, what you've been doing, and then we'll get into cryptocurrency and Bitcoin.
Yeah, sure. So short story long, I flew into China in 2002 after my MBA. I went to Thunderbird in Phoenix. Came in with the idea that I would learn Chinese in a couple months, fly home, get an expat job, come back, and life would be good. My 1 month tourist visa has been extended 21 years.
Wow.
And really, I just fell into it. Like China, I knew that it was on the verge of something interesting.
And this is in 2002, 2001.
Yeah. And I had been in Tokyo in 95, so I always had I was always trying to get back into Asia.
Got it.
And my background is supply chain and kind of macro work. So coming to China, I ended up doing valuation work for a lot of the non-performing loans, the big banks coming in, but also because it's valuation work, it's like, what's the value of an asset?
Yeah.
And so we would help UPS, GM, whatever, like try and figure out, we want to buy this company, how much is it worth? We want to invest in this factory, how much is it worth? And that led to just this amazing experience where I spent about a year and a half traveling all over China, helping groups figure out like how to make asset acquisitions across the second and third tier cities.
Yeah.
So along that time, I built a few different things, nonprofit, for-profit, where I was basically just as an academic trying to express or commercialize my own ideas.
Yeah.
And that led to a lot of interesting things. But what eventually I fell into is in a period around 2008 to 10, I started a nonprofit. I started teaching at the China Year Business School, and I transitioned all my for-profit consulting work into sustainability. So I was helping, my last big project was helping English First, or Disney English, expand in China through the real estate footprint. And while that happened, the earthquake happened. I'm like, well, I don't really want to do this work anymore. I want to figure out like all these things I've been looking at, food, water, labor. I want to do something.
You're referring to the earthquake with the China education.
Sichuan earthquake, yeah. 2008 earthquake.
Got it.
So Sichuan gets decimated.
Yes.
8 provinces. And we did a lot of work. So I helped bring in like millions of dollars of donations and equipment and stuff because I was kind of the CSR guy back then because I'm operating this middle space. And what I loved about China was just like it was an economy in motion. And I kept looking at sustainability as like the supply chain challenge, like food, water, labor, iron, coal. Like you just knew all this stuff's ramping up. They're coming to buildings, people coming to cities. How the hell is this going to work? And the reality is like it wasn't. There was a lot of problems that I get back to sustainability. Is like you have failures of systems, urban systems. And so, over the last 15 years, I've just been kind of constantly researching and having fun in that space. I work with a lot of brands. So my official titles are founder of Collective Responsibility, founder of Hands on China, AmCham Sustainability Chair, BMW Global Fellow, and then I'm on the United States Foreign Commercial Service Climate Action Group or something like that. So I have a lot of things I work on, and all of it's basically just trying to figure out what does sustainability mean in China, what's going wrong, what's going right, and what are the lessons that we can learn globally. And so I spend a lot of time between multinationals, like boards, government, like, consul generals trying to figure it out, and then just like trying to understand the systems. And China's an amazing place for this because, yes, you have smog, but then you have the most amazing, innovative entrepreneurs who are native Chinese, overseas educated Chinese, returning Chinese, foreigners, multinational, who are all coming into this.
Yeah, it's
everyone's trying to crack at
wide ecosystem.
It's a very wide ecosystem and solving real problems.
Yeah.
And that's where I think that I get into like my interest in like, we can talk about this later, but like crypto and where this comes is like, what problems are we facing and how are we going to solve them? Yeah.
So you told me you first became aware of crypto, Bitcoin, more than 10 years ago.
More than 10 years ago.
What was that experience like?
Well,
tell us the story. Like, when did you first hear about Bitcoin, and what was your initial reaction?
That's like asking, like, what's the first time you heard about COVID-0? It's like this weird, like, feeling of guilt, and I'm not sure what I should do about it. So I learned about crypto very early on, and I want to say it was like 2012, 2013.
Yeah.
I think it was going for about $4 a coin.
Yeah.
Maybe about 10.
Sounds about right.
Right. It was really early, and what was happening was I was in Singapore, looking at the future of food, because I've been very interested in food for many years, how it's basically delivered to the market. And I was working with an entrepreneur. We're looking at aquaponics, which is very popular back then. And basically, aquaponics is where you take fish and you have food. The fish poop. They make the food. Like they give you like the whole system. It's closed loop, right? And so it's supposed to be like the way of the future. Okay, fine. There's some challenges there, but one of the things that we're looking at is technologically. I was working with this guy from Eastern Europe, and he had this idea that if we monitor the water, we can actually improve the efficiency of the whole system. And I won't talk too deeply about it, but at the time that he was trying to raise $1 million to fund that idea, which I think is $1 billion idea for Asia, he managed to raise $1 million for crypto. And
in crypto or for crypto?
For crypto. He raised
for
the fund
Bitcoin.
For Bitcoin.
Yeah.
He had the first ATM in Singapore.
Yeah.
This guy was an absolute advocate. Rich, you've got to learn about this. You got to put money into it. Everything that we've heard about for the last 10 years. Yeah. He was telling me in 2012, 13, 14. And I'm like,
And you yourself put $1 million in Bitcoin.
I don't know what he put into it. I know that he's retired. I wish I just put 10,000 into it.
Yeah. Because I'm teasing you.
I would be doing really well. But at the time it was like the same question. Like, what is it? What does it do? Blah blah blah. Like, how do you trade it? And back then it was like there were no. Was there Mt. Gox?
There's Mt. Gox. That was one of the larger, one of the earliest,
one of the earliest,
and one of the earliest Bitcoin exchanges.
Yeah, so I mean, it was a real effort back then, and I mean, I was in Silicon Valley in the late '90s. I'm all up for tech, but I was still like, as an investor, I generally like things I can get in and out of. I don't really like real estate. I don't really like things that like, hey, I want to sell it and I have to go find a bunch of people. I like click and it's gone. Or it's click and I own it. Yeah. And so for me, like this was just it was just too much work at the time.
It was. Did you at the time have you heard of BTC China?
I knew about that. Yeah.
That was the first Bitcoin exchange in China. So I was the co-founder and CEO of that.
Yeah, I've heard a little bit about that story.
Some people, a lot of people in China who got exposed to Bitcoin used that as their first sort of entry.
Early on
ramp, ramp, off ramp, yeah.
And so I mean, back then it was just really complicated, and of course it's gotten significantly easier, right? Which is to the credit of the technology and the people behind it, and also just the marketplace learning from lessons of failure and what problems are they going to solve.
Yeah, actually, speaking of getting easier, I think it's a double-edged sword.
Right.
So in some sense, it's gotten easier. In some sense, it's gotten harder. So it just, speaking about the last 10 years, thinking back to the days of BTC China, people buying, selling Bitcoin on that platform in China 10 years ago, or even Mt. Gox, compared to today. Well, today China, we don't have any Bitcoin exchange platforms in China here because of the law and regulation.
Yeah.
But even if you were in Singapore, in some sense, it's easier because the technology has improved. But in a different sense, it's harder because of the regulatory compliance is much more strict. Back then, people would open accounts anonymously and transfer money. Not that it's all money laundering or illegal illicit activities, but it was just more easy flow. It's like no different than making an online payment. Right. Whereas today, it's very much controlled everywhere in the world.
Yeah. Well, I guess this is like what today the news broke that Binance is being sued by the U.S. government, whatever agency, for some of those practices.
Yes.
At some point in its history, right? So this is where I come back down to like one of the challenges I've seen just from the outside view is like the lack of regulation and the lack of governance. Lack of governance. I don't care where the governance comes from. I mean, initially I'd say the governance was always sold as decentralization is safety. But then I think a lot of people started to realize like, well, shit, we just lost this exchange and that one and this. And like it disappears, but it's all supposed to be there. But without the governance, you couldn't really formalize and provide security. So it remained kind of a niche.
Yeah, so this is interesting to bring up decentralization and governance. Yeah. It's actually, so cryptocurrency, a lot of people know about the fact that, decentralization is good. That's the whole idea of cryptocurrency. But like you point out, what's interesting is the companies that provide the cryptocurrency services, whether it's an exchange, whether it's a wallet, whether it's other, it's DeFi services and so on, or even NFTs, right? Companies that provide NFT platforms and services and custodial services for storing your cryptocurrency and assets.
Yeah.
Those companies are all centralized because that's human nature. The nature of a company, the nature of a gathering in society to do something.
Yeah.
A company is like an effort of a group of people to do something in society, and that is a centralized effort.
Yeah.
So I don't care if it's a company or even a government or even regulations, these are all centralized. So this is the constant struggle between what crypto wants to be is free and decentralized, yet when people get involved, it brings it back to a central model.
I guess so. For me, I guess the question I have for you around this is like, what is the problem that crypto solves?
So, great question. Let's take a step back. I think cryptocurrency is a broad category of digital assets, and then I'm much more a fan of Bitcoin as a core sort of topic.
Sure.
So Bitcoin came first, cryptocurrency came second.
Yeah.
So if you think of it that way, Bitcoin came out in 2009. I got exposed to it in 2011, and then I dedicated my career in 2013.
If only I had it at the same time.
Well, it was crazy to do it back then. So it's all risk reward adjusted, so to speak. So Bitcoin solves a specific problem that cryptocurrency is looking at it differently. Okay, so for Bitcoin, if I may talk about it a little bit, it solves a problem of money. And for that, you need to think about what is money. Money is a store of value. It's a unit of account. All these things. There's a classic definition of what money is. It's a means of exchange and so on.
Yeah.
If you look at money today, the U.S. dollar, the euro, the Japanese yen, the renminbi, it's all government fiat money issued by the government in whatever quantities they want.
Yeah.
And it's no longer backed by physical assets like gold, silver, and so on.
Right.
So this is a new phenomenon. This has only been around for a little bit over 50 years. In 1971, money went off the gold standard. So prior to 71, all of money was tied to something physical. Now it's no longer tied. And what you've seen this huge printing of money and inflation in the subsequent years.
Yeah.
So cryptocurrency, at least for Bitcoin is solving the problem because of the limited issuance. It was created to be only issuing 21 million at most.
Right.
So it's a scarce digital asset. And when you think about digital assets in the past, due to the nature of being digital, easy to copy, nothing in the digital realm was scarce. Game tokens, think of avatars or just photos. You can make infinite copies of photographs or files, right? But so Bitcoin became the first instance of a decentralized scarcity.
Yeah.
Because you could limit digital items if someone controlled it. Like I say, I will only issue, I'll only make 100 copies or 1,000 copies of this musical file.
Yeah.
Right. And then, but if I give it to you, then you can make another copy. So those are the issues. With Bitcoin, it solves that problem. And it becomes a good version of money because decentralized, people can send it peer-to-peer without a central intermediary to sort of judge whether or not you're allowed to pay for this or buy this and buy that.
Right.
So that's what Bitcoin is. And it's obviously, it's gotten some success. It's gone from, $4 to, 27,000. It's peaked out at $69,000, and I think it's going to go much higher, in the coming years. Now, cryptocurrency is much broader market. It's a much bigger market, and there's a lot of copycats, a lot of innovative new coins and tokens, and also the NFT things is all part of that ecosystem. Yeah, people call it Web3. All that uses private keys, sort of encryption and stuff like that, blockchain technology, decentralized finance. So that's a much bigger industry. And I think the jury is still out in terms of how useful cryptocurrency collectively is for the whole world's society. I think there are innovations in there, but not all of cryptocurrency is good. There's a lot of scams out there. There are a lot of schemes, a lot of bad things going on.
That's where governance comes in as well. It's like, there's no rules that are commonly accepted, and there's no governing board to say, okay, like a Fed. I mean, we can agree or disagree on what the Fed's role should be in driving an economy and what tools they have.
That's right.
But the reality is, like, they take out a lot of the stuff that should not be there as a first filter.
Correct.
Right.
Correct.
And they have set up rules of the road. Now we can agree or disagree about, are we headed in the right direction, right? But that's part of what's missing. They're providing like the adults in the room.
Correct.
Now we need the smartest adults in the room to know where we should be going. Is it 0.25%, 0.5%? Are we going too fast, going too slow, whatever? Are we printing too much? And these are all legitimate questions.
Of course.
My question, I guess my big thing is like, okay, if we separate the wheat from the chaff here, and okay, we're just going to focus on Bitcoin, how does it, okay, I can see where it solves a problem of a limited number of people who have a lot of assets who need another store of asset that's borderless. We'll just put it that way. Like they have full control. They can use it on a USB. They can get on a plane. You can do that, and that could be, you're a migrant coming from Central America into the States. You want to hold that store of value. Like, it doesn't mean rich people necessarily, but like it's a
hard currency.
It's a hard currency, or it's a store of wealth. That you can move around. So that's one thing I can see.
Yeah, it's a very important thing. So let me chime in a little bit on that one topic, because we don't want to gloss over it. Especially in this the banking crisis, right? It started with Silicon Valley Bank, Silvergate Bank, and Credit Suisse, and all that. And there might be more dominoes to fall in the banking crisis. And the best way to describe it is the whole banking crisis issue in the banking sector, the finance that we're talking about, global finance system today, is based on the idea of custodial money. So think about that. That term is not used often, custodial money. What it means is that the money of the world today, the vast majority of money is actually stored with someone else.
Sure.
Right? I don't care if you're a company as big as Tesla or Apple. These companies have a lot of cash. But the money of Tesla, the money of Apple, is not actually stored and controlled by Apple and Tesla respectively,
right?
But rather it's stored at a bank, and the bank does something with it, right? So this, even our money, right? Unless you have cash in your pocket, the vast majority of our money, fiat money in the bank, it's sitting in the checking account, a savings account, in the debit card account, whatever,
right?
Or in a stock brokerage account, and that money is also potentially used by the banking institution as a loan against someone else.
Sure.
So what the banking problems exposed is that when you have everyone storing their money, pulling together at a single bank, and if the bank makes some mistakes in how they lend it out or buy securities with it, then they find out, oh wait, you only have 80 cents on the dollar.
Yeah.
Right. So imagine the analogy I like to try out is, imagine you buy a new car. Everyone who buys cars are forced to park their cars in this garage.
Yeah.
It's called the Uber garage. And then what happens is, without you knowing it, your car is actually being lent out and being ride share.
Right.
So yes, when you want to drive your car, you go to the Uber garage and then they'll give you your car back. But when you're not looking, the car is being driven by someone else for another purpose.
Yeah.
And then when you all want to go drive the car, they're like, oh, sorry, we don't have enough cars for you.
Yeah.
And that's when the system is problematic.
Yeah, I mean, I've been watching this. I saw the financial crisis happen, obviously.
You talking about the one 12 years ago?
12 years ago.
Okay, yeah.
14 years ago.
14 years ago, yeah.
I'm seeing some things now that make me revisit that time.
Oh,
actually.
yeah.
But not specific to the banking industry, actually. I mean, so I don't know how much you want to put in this, but I used to manufacture construction tools for the U.S. market, and I made a specific tool for the stucco market. It's called the float. And stucco is that drippy stuff that's all over the Southwest houses, right? It's like this goopy stuff
on the walls and the ceilings.
Walls, on the outside.
Okay,
right?
yeah, stucco, yes.
So, Florida, New Mexico, Arizona, California, and our market died in 2007. My tools were no longer needed.
Yeah,
and guess
because
what?
New construction starts were at a zero.
But nobody really recognized it in 2008. So we were full 6 to 9 months in advance. If you've just been watching
I see. So
you
guys saw.
Yeah, we saw it before. We know what we were looking at. But if you look at the exports of office furniture from China to the U.S., it's poof. So what's happening to the commercial real estate market right now? People are now starting to talk about it. So there's all kinds of things.
So you see some signals earlier on. Oh yeah.
So my question about the banking industry is going to be, okay, I think we've saved the big banks We have enough.
Knock on wood.
Knock on wood, right? Like that's what everyone's flowing out from the middle to the big. Fine, okay. And that was what Dave Sachs and all these guys are going crazy about. Was we're going to route out these small banks, fine. But getting back to the idea that we need the smartest adults in the room. Yeah. Like, is the Fed and Treasury, and are they now looking at this and they have a problem that they can solve, and will they solve it? Because if they will, this gets back down to my use case for how these things play into the economy. Like, I fully appreciate that you can hedge some risk by being out of that system, out of that fiat system. But if the system itself is actually adjusting pretty quickly and it's still secure and people still trust it and it's still the means of the economy, then how does that affect the use case of this? I'm not negating it, but it might limit it.
Well, no. So Bitcoin was never invented and put out there as a replacement for the global financial system or the concept of money. It's there as a solution that people can choose to use in conjunction with regular old forms of money. Just like money today, colloquially you can say it's replaced gold, but it hasn't. Yeah. Gold is still all around the world. All the gold that was available before 1971 is still on this earth. It wasn't disintegrated and sent out into the dumpster, right?
Well, there was a Tesla shut off into space that had some gold in it.
A little bit, but it's still in our universe, right? So the point is with same thing with Bitcoin. So Bitcoin's been around from for the last 13, 14 years, and it hasn't what do you call it? It hasn't put away money, so to speak. Right. Bitcoin is now worth much more, meaning it just means that the global population see Bitcoin as valuable. They're parking some value into Bitcoin. And the question for you or me or whoever as an investor is, in the next 10, 20 years, do we see that ratio even higher? Do we want to participate in solely a monetary platform where it's custodial money, where money is always stored with someone else who can do willy-nilly with it? Right. Or do you want to park your car in your own garage where you don't want to let other people drive it?
Sure.
It comes down to that. Is it a shared money? It's like a gig economy. Like now even cars and Airbnb apartment rooms, now your money is shared. But it's been going on, it's been like this for decades. Right? The money that you and I own is actually shared.
Right.
That's the fundamental quote unquote problem I see. Right. Now you might be okay with having $1,000 or $10,000 shared, but do you want all your money shared, or do you want some of it yourself? So Bitcoin solves that problem. I'm a Bitcoin investor. I'm a heavy Bitcoin investor.
Sure.
So for me, aside from having US dollars, renminbi in my bank account, which I use to pay rent, pay for mortgage, pay for groceries and whatnot, I also have my assets in Bitcoin, because I know fundamentally when I have my own Bitcoin in self-custody, that's really my money and that's not shared with the rest of the world. Sure. And I can get to spend it whenever I want. I get to use it however I want. And of course, I want to make sure it's legitimate, you pay taxes and there's no money laundering, all of that. But as long as I'm an upstanding citizen, I think to me that makes more sense for me and my family than to have.
But then how do you factor in the fact that you have countries that are completely going on to the Bitcoin platform? And
going on?
Like they're like, we're going to switch to this as our major currency.
Well, there's only been a few so far.
But
El Salvador.
Still, that's millions of people who are forced to park their car in your Uber garage.
No.
Right?
I'm sorry, you mean going towards Bitcoin or going away from Bitcoin?
Going towards Bitcoin.
Well, then that's not. They're not forcing people to park their car in the Uber garage. They're saying you can have your own car and park it yourself and take custody of yourself.
But because they told you need to do it, they're kind of dictating that you're going to take on this.
Not really. I don't know if you've been to El Salvador since they announced Bitcoin as legal tender. They're not forcing people to use Bitcoin. So apparently, I haven't been there since. But for example, McDonald's, Starbucks, even regular stores and gas stations,
it's just
the merchants are compelled to accept it because it's legal tender.
Okay.
However, the customers and consumers are not forced to pay in Bitcoin, but they have an option to pay in Bitcoin or pay in the local fiat currency.
Okay. Yeah. And is that what you view as being like the ultimate vision then?
Not necessarily, to be honest with you, because to me, Bitcoin is money. Remember, money doesn't have to be immediately spendable. This is what I think is a common misconception.
Right.
Okay, for example, we're in China right now. US dollar, is that money?
Not in this country.
Well, see, this is the issue, right? So to me, U.S. dollar is money. If I have a wad of $100 U.S. dollar bills in my pocket, I feel rich. I feel that's my money. Now, I can't spend it in China, both legally, physically, and it just doesn't work because merchants don't accept it, and by law, they're not allowed to accept it. Right? But to me, U.S. dollar is still money.
Yeah.
You see my point?
Yeah.
So if I do want to spend it, I would then go to the bank, exchange it legitimately for RMB, the local CNY currency. Yeah. And with that, I can spend it. So to me, I see Bitcoin as hard currency, just like a lot of people in countries all around the world, less advanced countries, developing countries, they want hard currency. Why do those people want US dollars and euros? Because their local currency is weak.
Yeah.
And might lose value.
So
that's how I see Bitcoin as the hardest of hard currencies.
What keeps Bitcoin from higher levels of adoption? Like what does it need to achieve the next 5 years?
That's the $1 billion question.
The way it's been kind of sold to the outside market is that this is very much a disruption. It's a new path. And kind of like what you're saying, like in El Salvador, like it's one more option on your McDonald's kiosk, right?
Yeah.
But that's not full adoption. And
it's not.
What's it going to take to get to the next level of adoption or full adoption so that the vision is?
Yeah. So let me tell you my perspective. Of course, so all the Bitcoiners, all the crypto fans in the world, they have different perspectives.
Yeah.
So by no means is there a true sort of formula, a single formula for what defines success for Bitcoin. Okay.
Sure.
So El Salvador is the first country to legalize Bitcoin in the legal tender form. Mm-hmm. So they have compelled all businesses, all merchants, all aspects of society to accept Bitcoin just like they accept regular money. Okay. And in fact, it's not so crazy. Think about the money system today. Today, even in China or in the US, we actually accept two different kinds of currencies.
Yeah.
Right? Think about it in the US, right? You accept US dollars in paper form, and you also accept US dollars in coin form. They're actually different. Right? The paper US dollar and the coins are different.
Okay.
Right? Does that make sense? But they're all equivalent. Okay? So same thing. So in El Salvador, they're saying businesses, you have to accept the fiat money and Bitcoin. Okay? Now, to me, yes, it's interesting, but I'm not proposing a world where every single country legalizes Bitcoin in legal tender, where you're compelling businesses and all that to accept Bitcoin for payment. The reason is there's an overhead, right? So the truth of the matter is it's going to take a lot of time and a lot of technology progress to make that easy. Think about your fruit stand, think about your lemonade stand, think about your grocery store, think about your blah, blah, blah. I mean, it's hard enough getting people to accept credit cards and contactless payments, right? So we should let the market evolve as the market evolve, right? Now, for Bitcoin, what my advocacy is that it's really suitable as a global reserve currency. For countries where the currency is weak, where they peg it to the US dollar and yet they're forced to depeg. And the reason they're forced to depeg is because they end up printing more of their local currency.
Right.
So when they print too much of local currency, then it becomes less valuable. People want to escape it. So this is a vicious cycle. People want to exchange out from the local currency into a hard currency like the US dollar, euro, and it makes the local currency worth even less. And then because of that, the budget mismatch, they even print even more, right? So it's always like that, whether it's Zimbabwe or other countries in South Latin America.
Right.
So with Bitcoin, if you truly use money where you're not allowed to print more of, then there's more sort of fiscal responsibility in terms of budgeting, in terms of using it, and so on and so forth. But I know there's a downside with economies when they go into recessions and stuff like that. So it's hard.
And this is why, like, what is the real problem we're solving? Because I go back to like when the euro was developed. It's a very similar idea, right? That we'll all tie each other to the boats. But the reality is, like, the euro only worked for like 3 countries as a starting point. Yeah. And then they started to widen the band. And then
you're talking about the exchange rates, or
the exchange rate? Well, you had to have your employment, inflation, GDP. You had to have all these parameters in place before you could qualify. Because they wanted stability, right? They didn't want this crazy. Well, then they widened the banks. So like, well, we only got 3 countries, so we're going to do X, we're going to do Y, we're going to do Z. And pretty soon you're bringing in, you have one country like Germany, which is stabilizing Greece or Italy
Yeah.
or Spain,
Yeah.
because they had to now do counterbalances because you had this wider spectrum.
Yeah.
Well, how do you avoid that problem? Because you're still going to end up.
That's a very good point. The euro is a very interesting problem. I'm not by no means an expert in how that developed, and I'm not an advocate for it either. But the thing I want to point out is the euro is a centrally managed currency by the European Central Bank, the ECB, right? So it's a beast that was engineered, right? Where Bitcoin is also engineered, you could say, but with much more simple rules. Right, because Bitcoin was only engineered to set the parameter there's only 21 million and how it can travel, how it can be sent back and forth, and the sort of encryption standard behind it, who's the owner of the Bitcoin based on the private key. So that's it, and it's been left untouched pretty much for the last 14 years.
Right.
So now who uses it, who doesn't want to use it, who wants to use it, there's no more central authority in controlling that. Yeah. Whereas for the euro there is, right? Countries...
And that's what I find interesting is that it was a constructed currency in our lifetime.
You mean the euro?
The euro.
Yes.
And Bitcoin, I would argue, is
every currency is a constructed currency.
Right, but not just but in our lifetime.
No,
right?
There's a lot of other countries launch new currencies in our lifetime. We just not.
Yeah, but that was a currency that brought together different currencies. It brought together a wide spectrum
Fair
of
enough.
economies.
In that sense, yes, it was the first. Yeah.
It's kind of like this experiment of the U.S. dollar supremacy since World War II. That's Bretton Woods and all that. It's yeah. Okay, fine, got it. But when the euro countries decided to come together and create a whole new currency, in many ways, I feel like the principles are not dissimilar from what you just said about Bitcoin, about what they want from it. Now,
no, they're very different.
Spending,
very different. Right. So again, euro is a currency. Well, it's not backed by anything. So in that sense, it's a sort of currency that's not doesn't have a asset backing, right? Sure. But it is a managed currency with unlimited issuance. Right. So that's a very key difference with Bitcoin.
Yeah. Okay. I will give you that. I wonder, when they constructed it, did they think they'd go so crazy on the printing? Right. I think that they thought that this would be a way to get away from that too.
So I think there's a natural problem where anytime you have a currency that is centrally issued, by definition, you are the central issuer has control, and they have the option to print more and issue more, right? It's kind of like self-restraint. Yeah. How do you design a system where the master key knows self-restraint, right? So far in humanity, that hasn't happened.
We're not good with self-restraint.
We're not.
Humans are. Well, and that's why I get the centralization for me is not a building or an organization. In this case, it's an algorithm.
Now, well, so this is where Satoshi Nakamoto, the creator, inventor of Bitcoin, this is where the awesome thing is. After he created Bitcoin, he took himself out of the loop. Right. He did not give himself or herself or whatever themselves the master key. So Bitcoin was designed without the master key, so to speak. Right, everything else is designed with a master key. Yeah. Right. So this is why it's revolutionary and kind of scary at the same time, right? Because people who are used to having the master key look at Bitcoin and are like, "Hey, we can't use this. Right. There's no master key. What if the criminals use it?" Well, you know
criminals use cash too.
Yeah, they use cash too. With gold, there's also no master key. Right. And gold has been a successful currency in humanity for much longer than the fiat money system we have, right? Even the gold is disused now as money, but gold's been around for centuries, for millennium.
But it's used as a store of value, right? So it's still
that's money. That's money.
It still uses. It's money. It can be converted at any time.
Exactly. Right. Exactly. So, and there's no master key. No one can arbitrarily say, "Okay, Richard, because we don't like you or because we like you too much, your gold is now declared." Unusable.
For Bitcoin to find, I'll just call viability. I'm not saying that's not right now.
Sure,
there's a lot of questions about it. What does it need to do in 10 years that it's not doing right now?
You know what? My answer to that is not about what Bitcoin needs to do, because Bitcoin is lifeless. Bitcoin is not alive. It's not sentient. It's not an organization. Sure. So Bitcoin doesn't have an agenda. Really, Bitcoin doesn't. Yeah, sure, Bitcoin is inert. Right, you know the word inert. It's like gold. It's like a pile of gold. Like, what do you need to do, gold, for you to have global adoption? Well, gold is like, I'm just here. Yeah. Right, and Bitcoin's kind of like that too. I mean, you just don't see it. But Bitcoin, the 19 million Bitcoins that are circling the world, they just keep moving around, and they don't really know what they're doing. They just moving around.
What do they need
to
do
differently?
differently?
People. So it's not what Bitcoin needs to do differently.
Yeah.
It's what the people want to do differently. So in the end, Bitcoin will be successful if people want Bitcoin to be successful. If people find Bitcoin valuable, more and more people will use it. That's just natural logic, right?
Yeah.
If Bitcoin is not valuable, less and less people will use it. So my question to you and for the audience is, do we believe Bitcoin is valuable enough such that, let's say there's 100 million people using Bitcoin today.
Yeah.
In the next 5 years, will that number go up or down? It's what do you predict? And to have a good prediction, you really have to understand the true fundamental properties of Bitcoin if it is valuable to the existing 100 million people. And for me, having used Bitcoin for the last 10, 12 years, I think it's tremendously valuable.
What do you use it for?
So I use it as a store of value. I use it as an investment.
Yeah. Okay.
Right. I park my money. Money is what I've earned in my lifetime. I park that in Bitcoin.
Right.
And to me, that's safe and sound.
And how many of the 100 million people on the platform similar?
So there's no single Bitcoin platform, but on Bitcoin,
I mean, roughly.
Some people use it in and out. I mean, in the early days, as an example, Silk Road, you may have heard of this.
Of course.
Yeah, people used it to buy illegal drugs and illicit stuff.
Yeah.
People would exchange, like drug users and addicts would get Bitcoin and then spend it to buy the drugs on Silk Road.
Yeah.
And so they would have Bitcoin just momentarily for a few minutes or for a few hours.
Yeah.
And there are a lot of funny stories where these early Silk Road users look at their wallets. They might have thousands or even tens of thousands of Bitcoins that have flown through that wallet.
Right.
And in hindsight, they should have just kept the Bitcoin and not buy the drugs with it.
Yeah.
But nonetheless, so people use Bitcoins for different reasons. Some people use it transiently. So they get it and then they send it off because they use it as a form of payment, as a way to transfer money. Some people use it as an investment. Some people use it as speculation, as in you buy it not to send it out, but you buy it, but you think the price will go up.
What percentage of people do you think right now are using it to make purchases of Coca-Cola, coffee?
Very little.
Paying their phone bills?
Absolutely very little.
Okay.
From a gross dollar perspective.
Yeah.
But the ones who are doing it are actually doing it because they need to do it that way.
Now, in 5 years, do you need more people using it in that use case?
So
for
no,
Bitcoin to be,
I don't. Frankly, I don't think that's important.
Okay.
I think a lot of people get the idea that Bitcoin is only useful if I can spend it to buy groceries or at the convenience store buy Coca-Cola.
Right.
And I think that's a misnomer. I think that's a very closed-minded view of how Bitcoin can be useful.
So then, from the store of value perspective and investment perspective, is it that more people are using it? Is that the sign of success, or is it that they're allocating, like we always are, like just put 1% or 10% into Bitcoin? You'll, or do you want people going 50, 100%? Like what's a better range?
It's not
of success?
what I want. So I want people to do whatever they want to do.
Yeah.
I think my only strong suggestion is for people to learn and understand Bitcoin. That's why I wrote the book, The Promise of Bitcoin.
Sure.
So once people have a better idea of what Bitcoin is able to do, what the properties are, then they can decide for themselves if they want to invest and put 1% or 2%. If they don't want to, that's fine with me.
Yeah.
Because I know fundamentally Bitcoin is useful. I predict in my lifetime in the next 5, 10, 20 years, more and more people in actual numbers, as well as a higher and higher percentage of the global population will put their money in Bitcoin, put their value in Bitcoin. And that's why the overall value of Bitcoin going from $500 billion today to $1 trillion, $5 trillion, $10 trillion in the coming years. And one day I think it's going to reach $100 trillion of value.
What's the friction? What's the biggest friction point to getting to that?
It's the technology adoption. I think Bitcoin today is still too hard for everyone.
But
for many people.
There's apps and...
Yeah, but it's too hard.
Okay.
Like, let me ask you, Richard, when was the last time you bought Bitcoin? Was it easy?
I've never bought Bitcoin.
You never bought Bitcoin? Yeah. And part of it, which is fine, part of it is it's not easy enough.
Well, I will tell you why I don't. Right. And there's two main reasons. One is... the first one is I like assets that I can flip, instantly.
Yeah.
Right.
That's right.
And
so like on the stock market, like an ETF or something like that.
That have some fundamentals that I fully understand. So I understand Google's business model and Amazon's business model and Facebook's, and I can assess based on their PE, based on the products they're offering, like where I think their vision's going to be, and I'll invest behind that. But if I'm wrong,
you can sell it.
I can sell it
on a dime,
But I've seen too many of the exchanges and the apps and the holders go to zero. And even though it's decentralized and it's all transparent, you can see everything. You still lost it. And I've seen enough people who are really much smarter than I am lose it.
Yeah.
And that for me is like, okay. So that's why I come back to governance as being like, I'm not saying you need a Fed. I'm not saying you need a group of, 14 smarter people to govern the whole system.
Yes.
But there needs to be something between complete decentralization and no governance and the Fed that provides security and trust for average users.
Yeah.
Right. And by average users, I think the more tradable, the more you can use it every day. So I go back to electronic vehicles. I was teaching electronic vehicles, like the use case for them, almost 15 years ago, it seems. And I'd ask my students, would any of you buy an EV? No one. And we talk why. Okay, I'm worried about the battery. I don't know where to charge. If something goes wrong, I don't know what to do, whatever. I'm like, okay, what happens if you saw taxi drivers in the city driving EVs? Because we started seeing it in Hangzhou. Was the first one. They're like, why? Well, if a taxi driver they can make it the whole day. Okay, what else? If they can't make it, there'll be charging stations everywhere.
Yeah.
Then the mechanics will know how to fix it. So it's like these signals. That's what I was asking. Like if you saw people using Bitcoin every day in your life, this is so easy. I'll get mine. No, it's not WeChat. It's Bitcoin.
But you're still
more
stuck.
People would adopt.
But you're still stuck in the model of using it, of useful, having to do with transactions.
Well, I'm just thinking like use cases.
Yeah, but I see. This is it's a common. I think it's a common misconception that Bitcoin usefulness has to be in transactions.
I think for some people it does. I think I'm not saying everybody, and I'm not saying for myself. I think that if you
I agree with you. I agree with you. For many people it does.
For many people, and that would bring more people in. That would provide more stability to the platform.
Sure. That's why I think that's one of the fundamental challenges is this conception that for Bitcoin to be useful, you have to be able to spend it, and it's built into the problems with Bitcoin's adoption. So we'll see. We'll see. I think,
and that's what I was asking the question. You got 100 million people. How do you get to 100 billion? Or how do you get to 1 billion? Well, some people want this and some people want that. And I think for store of value, I think that for me as a user, it comes down to the speed of transaction and my security, my belief that the other options are better. Now that can change. We can have a crappy stock market. The U.S. dollar can lose supremacy. This is all stuff that we talk about that's viable, and that might actually. I mean, that's why you're seeing SVB and you're seeing the rise of Bitcoin now with the banking crash. We didn't see that before, and so it's like, okay, there's some things that are changing, and that's kind of why I was asking, like, what needs to happen, because to get from 100 million to 1 billion, you do need things to change.
Well, It's mentality. I think it's already changing. So look at Bitcoin's been around for 14 years, and if you look at the population, a lot of young people are into Web3 and crypto and metaverse and all that stuff.
Yeah.
And if I may say, the older generation today, who's in charge? Well, it's our generation. Today, who's in charge? It's probably
I'll be honest.
It's one generation older than us even. Yeah. The people who are in charge of the Fed. The people in charge of the regulators, all the chairmans, all the presidents of these I don't care if it's countries or regulators and so on, they're gonna get cycled out, right? Sad as it may be, they're gonna get cycled out in 10 years and 20 years.
Sure.
So people in their 20s and 30s today will be the heads of these banks and regulators and so on and so forth. And by then, crypto, decentralized, blockchain, all that stuff will be second nature.
Sure.
And that's when big changes will happen. So it does. I wouldn't be surprised if it takes a full generation, which is 25, 30 years, to sort of transition the system.
Well, and that's why I think if you're an investor, an entrepreneur in this space, having that vision is really important.
Absolutely.
Right?
That's you got to have the long-term vision, right? You got to believe this.
Yeah,
you got to understand and believe it.
Yeah.
Right? If you think you can do it in 5 years or 2 years, it's risky. It's very hard. It's very hard.
Yeah. So I get it's an interesting time. I think there's a lot of transitions happening that give this a use case for a lot of people.
Yeah.
I just think like, where does the technology go?
Yeah.
Right. And then how do you deliver to those users? Because I think some people want to be able to buy a Coke. Now, yeah, that Coke might be worth $14,000 in 3 years. And you're like, wow, I shouldn't have bought a Coke with that. But, because that's what my friend was doing down in Singapore. He had an ATM machine in a coffee shop.
Yeah.
And people were taking Bitcoin out to buy coffee.
Yeah.
Fucking in 2012.
Yeah, and then looking back, that was a squandered Bitcoin.
That's like a $22,000 flat white. You know?
Yeah.
And, I mean,
okay.
But that's because it evolved. It improved, right? And
yeah.
What was interesting was like back then, he had that vision. I didn't understand it. Now I understand the background a little bit more. So I am invested into the concept, just not into the coins or into the specific, technologies. I found other ways of doing that, which we talked about through the stock market. So I still view like I'm investing into entrepreneurs and organizations that are doing what you're trying to do here, right? Yeah. Like, and I fully appreciate that a lot of our systems are a mess. They've been mismanaged. And I think my son, who's now 11, he will see the world in a very different lens than I do. And he should build that world.
Yeah.
That's what is like really interesting. But so I basically said, like, I remember when I was, my 20s going to Silicon Valley, I was like, what's the internet? What's email? What's this?
Yeah.
Put $100,000 towards that.
Yeah.
Like, you don't know what it is. Yeah. Don't ask the questions.
But this is great. We should end on this point. So back in the internet revolution, when we saw the inklings of email and the web browser and the internet that became the internet today, we could not put $1,000 into that infrastructure. There was no way to invest in that future. Whereas with Bitcoin and cryptocurrency, there is, and the way to do it is to buy the coin directly. Okay, so thank you, Richard. It's been a great conversation. Thank you for being on the Bobby Lee Bitcoin podcast.
Yeah, thank you very much.
Okay, thank you. Bye-bye.